To tell us what moved the market, Julia. Wow, you couldn't have missed the interest rate decision. Really, well, quite a surprise when most have been tipping that the RBA would stay on hold for another month. But of course, rising. What impact did it have on the share market?
Friday today was a session which was dominated by that interest rate decision by the RBA. Now, we saw the market start off on positive territory with a positive lead from the US and commodity prices. But then ahead of that that Australian interest rate decision, we did see the market falling. And then once that interest rate decision was announced and we saw official interest rates rise by 25 basis points, we saw another drop off on the Australian share market. In the end, the Australian market still up by just 0.4%. Now, I guess the stocks which have been impacted are those stocks which have a heavy reliance on funding. Fortescue Metals was down by 3.1% ahead of the decision, and after the decision, it actually closed down 5.3%. So you can see that the losses there accelerated, and that's really on the expectations that funding costs are going to rise. So I guess the way that higher interest rates impact on companies listed on the Australian market are through higher funding costs and also usually through reduced consumer spending as well, and that's why retailers were heavily impacted. We saw David Jones down by 4.5% before the decision. At the close, it was down by 5.2%. Harvey Norman was down 1.4% before the decision, and by the close, down by 2.6%. In fact, most of the impact of that interest rate decision can be seen in that consumer discretionary sector, which holds most of those retailers. So this is a consumer discretionary sector today. We saw that decision come out at 2:30, and you can see that losses in that consumer discretionary sector really accelerated. On the upside, though, we did see the miners helping our market. We saw commodity prices higher. So Rio Tinto was up by 1.6% and BHP Billiton was up by 0.9%, and that really helped the Australian market close higher. In other company news, we saw Worley Parsons rising about 2.7%. It looks like it has won a deal to do a pre-feasibility study in Western Australia for Flinders Mine, so that was a positive. But ResMed was down by about 2.3%. It said it had made an acquisition, so its stock was impacted downwards. But altogether, a positive day for the Australian market, really dominated by the interest rate decision.
Sure was, wasn't it? Now, just another stock that we've been looking for an announcement from was Brambles. Of course, the review of the US Chet Pallet operations, also a new CEO, but the share price dipped after that announcement. Shareholders not impressed?
Shareholders weren't impressed with the results of this review. If we have a look at Brambles, their CHEP business in the US has come under pressure, not only because of the global financial crisis, but also a rival, Intelligent Global Pooling Systems, which is run by a former executive of Brambles and has the ex-CEO John Fletcher on its board as well. Now, it looks like it's going to try and reposition to concentrate on customer service as well as quality, and that's going to have a cost of $260 million up to 2012. So a pretty big cost burden there, $50 million per year, or around about that. And yet we're not going to see operating margins get back to around the mid-20s or the more normal levels until the financial year 2013. So I guess that was a little bit disappointing. The market expecting a bit more with that kind of spend. We also heard that a new CEO, Tom Gorman, will be the head of the ship. Now, he's currently looking after the European business of Brambles. He's the former Ford Australian CEO as well. So a few changes at Brambles, but the market really not impressed with the news today. If we have a look at Brambles share price, this is actually in the last two sessions, and you can see after that announcement we did see a sharp drop in its share price.
Now, Aristocrat Leisure, also one of the losers today with this long-running court case that's been going on.
Aristocrat Leisure yesterday was one of the best performers, and we saw JP Morgan increase its rating on the stock to an overweight. But today its shares coming under pressure, taking back some of those good gains from yesterday. It does look like the jury trial in the US has started. This is a long-running bondholder court case, but this court case was actually ruled in April this year that it would go ahead. So bondholders are suing for an unspecified amount. Aristocrat Leisure isn't actually going to make a comment on the case until until it's over in 3 to 4 weeks' time. Of course, the convertible US bondholder case has been running for a while now, and bondholders there trying to get back some of their money. There was a dispute between the convertible bondholders and Aristocrat Leisure. The bondholders wanted to actually convert their bonds into the share price or the underlying shares of Aristocrat Leisure, which at the time was about $300 million, but Aristocrat Leisure instead wanting to pay out the face value of the bonds at $170 million. So a continuation of that court case. Not good news for Aristocrat Leisure. It's used to court actions in the past. Back in 2008, we saw that class action settlement, which saw a settlement of about $144.5 million. So it wasn't good news for Aristocrat Leisure share price today. If we have a look at Aristocrat Leisure, this is the last 3 days worth of trading. You can see that yesterday we saw a sharp move upwards because of that rating from JP Morgan, but today shares coming under a fair bit of pressure today.
Just looking, I guess, a little longer term, Julia, what do you see happening over the next few months with the Aussie share market? Was there any kind of level that was reached today or behaviour that you've been watching?
I guess the level on the upside was that 4,800 point mark, which was a test for the Australian share market. And as we inched towards that mark, the market got more and more nervous. And of course, we never got to that mark. So that 4,800 point of resistance still in place for the market. Really, the US market still looks like it's in the midst of a pullback. So the big question is how big that pullback is going to be. But at the moment, the Australian economy looking quite well, which is evidenced by that RBA decision today to increase interest rates. But increasing interest rates are generally a negative for the share market, although it does reflect a pretty strong Australian underlying economy. Going forward, it means that cash investments look like a more attractive proposition. The funding costs of companies also increase, so growth becomes more expensive as well, and it impacts on the back pockets of consumers. So consumer spending is expected to be a little bit weaker. So rising interest rates generally a negative for the share market going forward.